With June 30 now just 3 days away, time is fast running out for us to get our tax in order. But how do we maximise our refunds? To talk us through the expert tips, I am joined in studio by Olivia Maragna from Aspire Retire. Olivia, thank you for joining us. What do you think are some of the most basic things people can do to get the most out of their refund?
Well, the first thing should really be looking at bringing forward deductions. So if you can pay for some expenses over the next few days, it means that your income will be reduced and you get the tax benefit of paying that. Now, keep in mind your income this year versus next year, so make sure you're being smart about it. But a lot of people enjoy getting those tax deductions as opposed to waiting another 12 months to claim them from that point of view. The other thing to keep in mind is things like if you've got, say, for example, a rental property, maybe making some small, minor repairs and maintenance before the end of financial year is really smart as well.
Okay, I'd like to know your top 3 smart actions that we should all be taking before the end of financial year. Now, we don't have long before we make it.
So the biggest thing is if you've sold an investment this year and you've made a capital gain, don't just sit back and pay the tax on that capital gain. Consider maybe realising some capital losses. So if you've got, say, for example, some shares where there's some unrealised losses, realise those and offset that gain and save some tax. You can also potentially use super to minimise that capital gains tax bill as well. So make sure you're looking into that before 30 June. But also just keep in mind, in terms of superannuation, we're up for the biggest changes in superannuation starting 1st of July. So my tip would be to review your situation, take advantage of anything you can over the next few days before those rules change.
Okay, some very good advice. What are the other incentives that we could take advantage of to just get a little bit more cash into our hip pockets?
So some good news for low-income earners. So if you're earning less than $50,000 and you've had some employment income this year, you may be eligible to put some money into super and the government tops that up. So say, for example, $1,000 going into superannuation, the government can top up to $500 there as well. Some incentives if you're getting a bonus before the end of financial year. So salary sacrificing into super may save you some tax. Really simple example, someone on $90,000 will save about $1,500 in tax if they salary sacrifice a $5,000 bonus there as well. But also for low or non-working spouses, topping up their super balance can also give you some extra rebates. So check your eligibility there and make sure you take advantage before end of financial year.
Okay, well, that clock is ticking. I think I better get my shoebox of receipts organised. Olivia, thank you so much for joining us.
Thank you.